It's Wednesday afternoon, 1 p.m. Eastern. We are here with Cory McOmber and Ike Okonkwo, joining me from Andes STR. Very exciting. We have also yours truly, Michal from Lendai, in another great webinar session. This one would be dedicated to short-term rentals, the in and outs. We're gonna ask a lot of questions. We're gonna answer a lot of questions. The cherry on the top for me would be a very nice presentation of the fabulous properties you guys are managing. People are still joining, but let's get it started. I don't want us to go overlap so much. So Cory, please introduce yourself.
Yeah, happy to do so. Thank you, Michal and the team for inviting us. We're excited to be part of this partnership here. So kind of my brief background, I started in consulting out of school, nearly a decade ago, and was in a couple of flavors of it. The first version was very data intensive, which you'll see why that's kind of useful at a place like Andes right now. Moved into strategy consulting, and then was on the buy side for a number of years, where I did investing in private equity and hedge fund space. Went to business school, rethought my trajectory, my life, et cetera, and then found out about this incredible rocket ship startup, which is Andes. And we'll get more into it, but it aligns with a lot of the things that I was excited about doing in prior career work, but in a really exciting new space in short-term rentals. And so, yeah, there's a little bit of my background there. Excited to be here with you all.
Super.
Fantastic, thank you. And Ike, you go ahead.
Sure. My background is a little more circuitous than Cory's. I started off as a scientist by training, studied neuroscience at Harvard, did a lot of life science research, and ultimately had the opportunity to do some medical tourism work and operate my own business in a lot of emerging markets. And through that process, I ended up taking the founder's path and learning alongside a lot of big travel agencies that short-term rentals and guest lodging was the future. And went to business school, focused on this marketplace full-time, graduated with Wharton, with Cory actually, and joined Andes.
So nice. So you guys have a previous background of, you know each other from school, which is great. I love the chemistry and the flow. I'm coming from mostly customer service with Lendai. I'm in the sales department and working on business development, partnership relations, and everything that combines all those fronts together. We also see on the screen Miles Kulik, who is my Canadian colleague here at the Canadian front. We're running the Canadian arm of Lendai. As you all know, hello, Miles. As you all know, Lendai is a global US lender, currently operating from 5, if I include India, 5 locations around the world, supporting around 20 origin countries, and offering financing solutions for foreign nationals investing in the US. Now, we all know that foreign nationals, not only foreign nationals, of course, Americans in America, and the short-term rental is not a niche anymore. It's a go-to market, especially with inflation, with higher rates environment, with what we see currently in the market. We see how investors are looking at short-term rentals as a goal, right? So, for example, if I'm looking on the investor side, I would probably think to myself to start with a single family or a small multifamily, a duplex, a triplex. And then once I generate an income and a positive cash flow, that's where I'm saying to myself, I'm going to utilize that cash flow. I'm going to use that to jump into the next level. And maybe the next level for me will be to go to Florida and maybe different places in different states in the US and take a deeper dive going into short-term rentals. So I'm just going to start with the first question. We're going to do a session of questions and answers and a small discussion on each one. So the first one, short-term rentals 101. How should investors think about short-term rentals versus other real estate investments? So exactly the way I introduced it. Should I start small and short-term rentals is my next step? Or can I start from short-term rentals? Go ahead, take it, Cory.
Yeah, I'll kick it off here. Great question. And that's often one of the best frames for short-term rentals is how does this compare versus other real estate investments, many of which, right, asset classes have been around for a long time, and probably folks who are joining us here, if they've been real estate investors before, it'll be helpful to kind of compare and contrast. So maybe I'll just kind of answer first of all the question, what are short-term rentals? Some people get a little tied up in like the name or just if they've seen it before. Essentially, a short-term rental is a furnished property that is rented out by the night. And the length of stay, it's not like it's, one night and then done. The length of guest stays can last anywhere from between, one night all the way up to several months at a time. Typically, it's no longer than 6 months, but it really can vary, right? So that term short-term really could span that kind of difference of time of stay. And guests, they could be individuals, they could be families, they could be, friend or business groups who stay in properties for leisure, life, work-related trips. And we see a number of kind of trends that are moving us as a society more towards the short-term rental model, which is there's more remote workers, there's digital nomads, right? These are increasing and contributing to longer stays. And in fact, an interesting, maybe a little known fact is when you look at Airbnb, kind of the most famous OTA or online travel agency in the short-term rental space, the longest or the fastest growing part of their core guest groups are stays longer than 30 days. And this is post-COVID, right? So something like a quarter of them. Yeah, something like a quarter of their stays are over 30 days. So it's important to realize, right, that short term could mean different things in different markets.
Absolutely. And I'll just add to that. There are a few trends that we're seeing that have contributed to a boom in short-term rentals in the last 10 years. That's the acceleration of remote work. We've seen tech platforms competing with Airbnb. We've seen a bigger move towards experiential travel, and even for investors investing in more niche type of short-term rental stays and offering differentiated offerings for guests. So we're seeing the short-term rental community grow. We're definitely seeing this in the US. I know in the US, there's at least 1 million short-term rentals listed right now, and globally it's closer to 20 million. So the number of units is growing. We've seen, I think it's from 2018 to 2021, a growth rate of around 32%. So, these are just some interesting kind of overview and stats for those thinking about short-term rentals to noodle on, because we're expecting to see this type of double-digit growth rate in short-term rental listings to continue over the next 5 years. So I think that's a good overview. And I guess, Cory, could probably add a little bit more about how to think about this market compared to kind of other real estate investments.
Yeah, thanks. I was just going to comment. We kind of think about the short-term rental market as unique in 5 ways. The first and probably the most important to an investor is profitability. So cash flows for short-term rentals, there's something like 2 to 3 times more than the long-term rental analog, like almost like the exact same asset in revenue. Yeah. And that translates to higher profits, better returns for investors. The second piece is that it's downside protected. And when we talk about this as a short-term rental owner, right, you can switch over to a long-term rental, right, long-term leases at any time, right, especially, right, if for whatever reason, right? Complexity reasons or the market reasons or whatever, you have that right downside. And then from there, right, the long-term rental, well, then you also have the option to sell, right? Which we try and position ourselves in very liquid markets so that it's easy to get in and out. And we actually help folks if they're wanting to exit, usually try and line up with another buyer. So it makes for a seamless transaction.
Mm-hmm.
The third kind of piece of this 5-leg stool, I guess, is inflation hedged. And actually, I'm gonna go on a limb here and say a term that maybe folks are not familiar with, which is inflation advantaged. We actually perform well during periods of inflation. And the reason why this is different than most other real estate, right, is that pricing, right? The pricing of leases essentially resets nightly almost.
Right.
So we respond to changes in inflation. And there's actually a history, including this past year, of price increases above CPI, which I think is really important for folks, especially in today's environment.
Mm-hmm.
Last two kind of legs, the future of work. We talked about this a little bit before, but short-term rentals are really well positioned for a growing remote work and digital nomad trends. And then fifth, right, investability. It's much easier now than ever before. And at Andes, we're trying to make this as easy as possible to become a short-term rental owner, kind of turnkey, which is making it an investable asset class. So I think that's a good summary of how, the 101 of short-term rentals.
Yeah, that's fantastic. We, you guys brought some good intel, a little bit of numbers for us to better understand how the market developed from the beginning, what the investor is looking for, obviously cash flow that is 2 or 3 times more, and the ability to always be able to go back to a long-term rental or talk about the exit strategy if things doesn't work well, right? So it's very flexible. You can you're not going into an adventure that's gonna stay the same. It's very flexible to change according to the market and whatnot. So as a follow-up question on what we just talked about, how does Andes help investors source good deals? Like you said, there is maybe 1 million or 2 million properties of short-term rentals. How can I find the right deal, and how can you guys help me do that?
Yeah, great question, Michal. I'll jump in first here. So
Sure.
one of the things we like to say at Andes is that we are very investment thesis driven. If you notice, our management team has over 40 plus years of real estate experience, has done over $30 billion in real estate transactions. So they come from a large line of investment banking, consulting, private equity shops. That's to say they really know how to do their deep dive and their due diligence and the process to underwriting a good deal. So one of the first value adds that we bring to our investors is market selection. We like to say you make money in real estate when you buy, right? So we study individual markets and we look for factors such as strong job growth, inward migration, positive socioeconomic trends, favorable regulation, high liquidity, giving you that downside protection, giving you always the option to even convert back and forth between short and long-term rental. And then obviously we are optimizing for high cap rates, which I'm sure Cory will dive into in just a second. But we are seeing a strong interest and movement of capital and people in particular regions in the US, particularly the Sun Belt. So that's parts of California, Arizona, several cities in Texas, of course, our flagship market, Florida, even a few places in Georgia and the Carolinas. So we do that first deep thinking for our investors, and then we share resources with them so they can actually make really, really informed decisions around our investment thesis.
Yeah, I'm glad you touched on this, Ike, because there's a lot of markets out there, right? And there's many blogs, forums, et cetera, folks talking about where, they have short-term rentals, over 1 million scattered across the US and then many more globally. So our approach is pretty particular. We view all of this as a financial product, essentially, right? That's the outcome of what we think is, our product that we're offering to the market. And as investors, right, creating a firm by investors and for investors, to us, the way that we judge, these investments is based on a risk-adjusted return basis. So I'm going to break that down a little bit: risk, rate, adjusted, and then the return profile. So we'll start with returns. in our kind of core markets, right, our safest, lowest risk markets, we're seeing something like an average of 9% cash yield over 5 years. And this is an interesting part of the model of short-term rentals, is if done right, we talked about this before, revenues grows faster than CPI, which means if your expense base, right, that you manage, right, for managing a short-term rental is mostly tied, right, through labor and materials to CPI, and your revenues are growing faster than that, then obviously your cash yield is going to grow over time. So that's an important, when we talk with investors, kind of do our one-on-ones and discuss like deals that meet their buy box and stuff. This is an important point that we drill in on. So we also like high cap rates. That's fancy, right? Finance, real estate terminology, basically for return on investment in the first year or so. And basically what we do, maybe Ike, you can touch on this a bit, but we have technology built to find that really, really, high durable cap rates.
Right.
And then I guess maybe another way of thinking about this, right, is IRR. Like if you were to hold something over the course of 5 years, we look to obtain, right, 40 to 50% of returns coming from cash flow. So you de-risk your original position over time, right, through cash. And in other markets that are maybe a little bit higher, quote, risk than our kind of core markets right now, that could be even faster. And so the cash yield, right, which would be higher. You may be thinking about, okay, great, that's the return profile in the safest market. Maybe there's upside in different markets. Well, what are the risks, right, associated with this? All of the risks that you have for any like long-term rental, right, are going to be endemic to the short-term rental market, right? It's the same kind of asset, often the identical asset that you use as a long-term rental could be in a short-term rental.
Yeah.
So macroeconomic conditions, inward migration, job employment prospects, infrastructure build out, all those kinds of things are, fairly similar between the two.
Coming into place.
Yeah, and so there's a couple ways where we differ, and probably the most important is in regulation, right? So short-term rental regulation is starting to become more entrenched or growing or changing, right, as we speak. And so is a big part of our diligence on the market side. We prefer for markets to be in low regulatory risk environments. And what that means for us is something like places that require or already have regulation on the books, right? Where short-term rental tax revenues contribute a meaningful amount to a municipality. I mean, that just creates some difficulty in changing the law, right? If it's already there and we're already a force. And then like indirect, right? It's not just tax revenues from basically stays, but there's a lot of indirect ways that short-term rental guests, right, hospitality guests are influencing the local economy and pouring money into the local economy and jobs. And so we look for a lot of those kind of positive trends. But I think we'd be remiss if we didn't touch on the technology side, at least a bit right now, of how Andes helps find some good deals. I don't know, Ike, do you want to
Yeah, I'll jump in. That's our secret sauce, right? Technology, at the end of the day, we are a technology startup or a prop tech startup. And what our technology allows us to do is understand what is the top 1% of the short-term rental market. And we do this by gathering a ton of information on short-term rentals in any particular market. And we underwrite every deal that's listed. And in a given market within milliseconds, we can have an underwriting for both the asset as a short-term or long-term rental. And we have an incredible data science team. They're studying hundreds of data points, over 400 data points for any given property that we run through our models. And that can tell you things like, having an upgrade like a jacuzzi will be responsible for generating $32 a night more in this particular market, or distance to a theme park, et cetera. So that's the biggest value out of our technology, is giving you, with really a high degree of accuracy, the amount that you're going to be able to extract from the asset before you even invest. And so to recap, we make it super easy for our investors as far as sourcing these good deals, but then we do the hard part of managing and marketing the asset and helping you get ramped up as well.
That's fantastic. So just to conclude, it's for us as a lender and part of our collaboration in terms of risk management on the lending side, it's very comforting to know that you guys are not only analyzing the property, but you're also looking at all the aspects of real estate, so IRR, cap rates, the cash flow, the possibilities, and then you're taking all this information and informing the investor. So the investor is not staying in the dark. He knows exactly where is he going to go into, what it's going to look like. And also, we have to be fair and talk about the risks. I find, in my perspective, that the risks are like any other business that you open. We at Lendai look at it as a business, we finance it as a business, and that's how we treat it. So every person that's opening a business should know what are the risks, how to mitigate them, and where is it going into. So the right investigation of market, the numbers, the potential, and so on and so forth. So thank you so much for elaborating on that. We're going to jump into the third question of how can choosing an operator or a property manager affects the investment? So we obviously, and especially as a foreign national, which is, the bigger scope of our clientele, the foreign national sits thousands of miles away from the property. It's for him or her, they want to make it as passive as possible. Doesn't even make sense to make it passive. And again, how the operator will affect that investment.
This is a really great point, and maybe something we should have highlighted earlier is that a lot of our investors currently are foreign nationals. We have a lot of folks in LATAM and some other parts of the world, and so this is top of mind for our current client list, and it's something that we think is really important. In fact, we have an internal saying that whereas other kind of real estate groups, the operations or the property management group is something more commoditized. This is not the case in short-term rentals. In short-term rentals, choosing an operator is a key feature of the returns essentially that you're going to receive from your investment, right? There's a bunch more moving parts that are happening in a short-term rental. It's like a hotel within, a single home or a multifamily kind of complex. It's like a very complex.
Very dynamic.
It's very dynamic, right?
Very dynamic. Things are changing by the minute.
Totally, exactly. And so it's important to think about that. So not only, should you think about this, but you really need to choose a group that you can trust. And so to kind of highlight what we're doing at Andes, right? We've managed over 80 million in assets to date, and we're growing in our core areas. There's 6+ years of management in short-term rentals that we have, which, by the way, is a very long time in short-term rental world, right? The current version of short-term rentals really hasn't been around all that long. And so even though the industry generally actually has, that's a separate discussion, but it's fun to see how it's evolved over time. And funny enough, a little bit of a tie in here at Lendai just crossed my mind is our very first market 6 years ago as a property manager was actually in Toronto, funny enough. And so we have experience outside the States. We're in the States right now in our flagship markets. And then we actually expanded just recently into South America. And so we've been around for quite some time, and we have a bit of a playbook and an idea of how to do things. I don't know, Ike, do you want to touch a bit more on more of the nitty-gritty side of what we do?
Sure. And Michal, to your last point, I would say, if you want to talk about de-risking your investment, you can't talk about short-term rentals without talking about the operator. With short-term rentals, you are married to the operator, right? So whether you're an individual investor or even institutions, they have this headache of, I'm married to the operator, and a bad operator will drive the value of my asset to zero, and a good one will be what allows me to prosper. And so that's why we place such a strong emphasis on the details of operations. There's a few things that we can talk about, and I'm sure at the end we can even show you in our presentations, media of our homes. You can see kind of the nitty-gritty. But there's items such as upgrading and furnishing the home that we take the same data-driven approach to understanding what attributes in a particular market, whether it's pools, themed rooms, bunk beds, game rooms, barbecues, etc., will be responsible for optimizing revenue. Then when it comes to actually implementing those features, we have really strong wholesale relationships so we can get durable, high quality vendors for you, as opposed to an individual who's kind of ad hoc trying to reach that same threshold of top 1% performance of Airbnb. And that's important because it really will shorten the payback period. A lot of these attributes pay for themselves many times over once we implement them into the homes. So again, if we get a chance to end of this session, I'm happy to talk more through some of those features. But yeah, to Cory's point, we have a very detailed playbook as far as how we operate with our guest check-ins, how we monitor the noise with an Airbnb, how we do cleaning and turnarounds and maintenance providing. So it's just a function of being a really seasoned veteran of the short-term rental space and adding that at scale to our customers.
Absolutely. I also think that if we clean all the technicalities, we're leaving, we're staying with the soft skills of customer service, transparency, sense of urgency, things that are so important in case of any issue that comes up. And like we said, things are so dynamic, issues are coming up by the minute. I want to be able to pick up the phone and say, hey, is this under control? Is my business being taken care of? Yes, perfect. Thank you. Keep me posted. So,
yeah, Michelle, I was actually, you mentioned something really important, which is not only we dwell a lot on like the physical ops space, right? Whether it's the value add build out at the beginning,
right,
or it's the cleaning, right? It's very physical, kind of operational heavy type of a business, but there's actually a significant part. We split it into physical ops and then digital ops. And digital ops can mean things like dynamic pricing, right? It's like basically doing Uber or flight, right? Air flights on these individual kind of properties. So pretty sophisticated work there on the software as well as the personnel side. Or guest communication, owner communications, making sure that we upsell, for example, guests on unique features, and being on top of that, really driving profitability there. Or even the marketing and distribution, right? It's not. You're not best in class if you just list on like Airbnb and that's it. There's many distribution channels and there's a lot of ways to do things individually, right? On social media,
that's right.
etc.
So many. And we're going to conclude by saying that there is a direct effect on that key person, the property manager, the operator, on your investment. And you can avoid it. So well that you covered so many parameters that's touching that point. Having said that, the fourth question: how does Andes help investors maximizing cash flow while keeping expenses down? This is a question that I've been waiting for personally, because as a business owner, let's talk a little bit in a for the people. As a business owner, sometimes you reach a point in your business, and the point is either I pay from my pocket or I take down the costs. How will I be able to take down those costs? How will I be able to maximize my cash flow without the fears of being maybe at some point I'll need to pay it out of pocket? We don't want to get there. Go ahead.
Yeah, that's a great question, Michal. We spend a lot of time thinking about this question. At the end of the day, Andes is a financial product, and we base our pride on strong returns and cash flows. So the main way we do this is having a synergy and an alignment with our customers, such that Andes only wins when our investors achieve success. So we are interested in maximizing those risk-adjusted returns, and we do this with our business model. So the way all of our transactions consist of two parts, and this is how we make money effectively. Number one is we collect the sunk cost of the brokerage fee, right? So anytime you purchase a home that there's got to be a brokerage that collects that. Andes operates as a brokerage, and that's where we align in step one. The other sunk cost is the property management, right? You're looking for someone to manage the home that's thousands of miles away. Andes operates in-house as a property manager for you. Again, it's a sunk cost. And so in that sense, we're not adding any other unnecessary expenses to our investors other than the sunk costs. So I think that's probably the most important thing, is just kind of understanding our fees and our structure, because both of those fees are unavoidable for any type of passive income asset like this. And then I would add to that by saying our model it's almost like a private equity model, in that we're viewing these assets as accurately priced and understanding that we can extract more value out of them through our technology. And so I'll let Cory talk about this a little bit more, because the numbers speak for themselves as far as cap rates that we're getting in our prime markets and cash flows that we're getting.
Perfect.
Yeah. We should really underline, by the way, the transparency fact. So we're super, super transparent. In fact, there's a number of competitors, right, who in their property management agreement, which is significant, right? It's very different kind of style than like a long-term rental would be. They'll say something as kind of the base percentage, and then they'll weave in a bunch of other, monthly or annual, or just a bunch of other fees that when you add it up is actually more, right, than that. And we take the approach of being very, very simple, right? We bake everything into a single percentage, so it's very easy to compare and contrast. And we have like industry leading pull out capabilities of contracts, like literally 2 months after, operating, if you're not satisfied, you can pull out, which is again, industry leading. And so, yeah, talking about the cap rate, right? So it's very important to think about what is your return on investment going to be. And so if you think about this, right, there's the return side, right, the top portion of that fraction, and then there's the bottom, the property purchase or the investment you've made, the equity investment side.
Yeah.
We come in as an advisor and we say, we want you to maximize that return. And so maybe just starting with the denominator, there's a lot of costs that don't really make sense, or a lot of like a purchase, right? If it's a luxury house with a ton of square footage and it's a really high purchase price, there's certain concierge services or something like that. It's going to be hard to get a good return on that investment. Fine if that's not primary consideration of the investor, right? For other reasons, the investor values having something that's more in that luxury space, but it can be a little bit more difficult, right, for the returns to actually match up with something that's slightly different. Market by market, it's different. It depends on the market, but generally that's what we see. Is we'll say, we'll always compare different investment opportunities, and so paying up for something that a guest doesn't care about is important insight for folks to understand. Switching back over to the top portion of it, which is how to drive costs down. We rarely, as a property management group, either ourselves or require of anyone else, right, spending more money on things that don't meaningfully drive revenue over the long term, right? Sometimes that means like, how do we get the best star ratings or just reviews from guests and no more, right? So having white glove service and delivering things that ultimately the guest doesn't care for, is not willing to pay for. Well, that's added cost, right, to the investor essentially. And so something that we don't do. In fact, we have industry leading kind of value-based pricing, and we're pretty transparent about that as well. And the reason is because we are working with investors, not second homeowners, right? We're working with investors who see this as a business, as kind of you mentioned, Michal, and then being able to maximize, right, that return. You
said a couple of key notes there that I would like to hold on. The first one is implementing the cash flow inside the model. So if there is no cash flow, if you're assessing and seeing that it's not working within the Andes model, it's just not going to be a part of it. You're just not going to be there. And that's very important to Lendai, or very similar to Lendai's model, where if there is no cash flow in the investment, if we're seeing an investment that has some issues, this is simply something that we're not going to fund. And it's very straightforward. So for us, it's very important, again, on the lender perspective, it's very important then that if it's a, let's say if it's a no, if it's a currently no, then very important to say it from the get-go, for just not to waste anyone's time and not to go in there and not to go into places where we don't want to be. So so implementing that into your model, this is the first key. And the second thing you said that kind of opened my mind into it, I didn't think of that, is putting the money on or putting more money on something that the guest is not even interested or doesn't even care about. I haven't thought about it that way, and that's a very, very important note.
Yeah, it's super important. And so that's from the get-go, right? Just like our technology scrapes the entirety of a market, right? We know what all the listings look like, what are the top performing ones, and we know what's on the market as far as what you can purchase and list as a short-term rental. Maybe another way to think about this, by the way, is, are there other ways to actively manage costs? And so something that we've seen, well, we work with all the major OTAs to settle claims quickly. And so there's a playbook that we have working with guests, say something happens, you'd be surprised. We have other property kind of peer managers who, even sometimes really good ones, their first instinct is to charge the investor or the owner for replacing items or replenishing guest supplies and consumables, or other things that actually the guest is willing to pay for either up front or even after the stay if there happens to be an issue. And so being actively managing that, right, essentially means less right out of the pocket or the kind of the pocket right of the investor. And then there's even side considerations. Like, I assume most folks here as real estate investors, you probably have an attorney that manages all aspects of your portfolio. And there's probably some investments that you have that are very easy, very seamless, easy for your accountants and bookkeepers, right, to account for.
Yeah.
And there's others that aren't. And so we do all of the back office accounting and bookkeeping, right, on the asset basis, on the asset level, such that we can send monthly reporting to investors, the P&L. You can dig in on any of the line items to understand the expenses, but we package it in a way that's very easy for CPAs to use, right, when they're processing taxes or other things of that nature. So we save money not only, right, in the operations of the asset, but also for other kind of ancillary work that, you have as an investor.
Perfect. So for the ongoing expenses or any other services that eventually the investor will be able to or will need to deal with, you guys covered that too. And so we're moving forward to our last question, and it's a big one. We're going to talk a little bit about technology. Both of us are working for startups, for technology-based companies, data-driven. This is something that takes a big part of our operation. You see me at the front, but there are, at least in Lendai, a huge tech and development center with brilliant minds that are kind of the engine that keeps keeps our operation moving forward. So investing and operating short-term rentals seems like an industry where technology and digital solutions would be important. I'm also a consumer, and I'm a big fan of Airbnb, and I like when I'm coming to my place where I'm going to sleep, I like minimum interaction, minimum friction. I want to go into my to the place I've booked, use the PIN pad or the lock code, open it. It's mine for the week, and I go home. Then I leave a review. So this is all technology and a solution that helps the whole industry. So can you tell us a little bit about the Andes solution?
Sure, happy to. I like, Michal, that you mentioned all the technology that we embed in the homes as well. That's certainly important for Andes. But in actuality, our technology starts well before then, right? With our solution as far as automating how we source the properties, even things like our back-end accounting and reporting, monitoring. I mentioned this earlier with some of our kind of home tools for getting the decibels of sound and understanding what's happening in the homes. And So we really are very disciplined about incorporating technology into every aspect of our operations. I think the best way to illustrate that is to tell a customer story. This is a real customer story that happened recently. And I will say as a founder, it's really heartwarming when you hear those stories from a customer that are unexpected, right? Like this customer, Diego, was talking to one of our advisors. They're both from Latin America in Florida, Miami. And he didn't know that he was an advisor on our company. So this is unsolicited. And he was over at the house and talking to Diego, and he was telling our advisor just about how happy he was with Andy's service. And Diego, he comes from Chile. He was a foreign investor himself. It was his first time buying a property in the US. And one of the quotes that stood out when talking to Diego, and I followed up with him directly because I wanted to hear more from this customer. He was just saying that he felt like he had an expert advising him on every step of the process, from the sourcing the deal to legal to the taxes, and that level of service, it really stood out. And so I think we could only accomplish that with our technology, because even our ability to identify that top 1% of deals and create a bespoke buy box for Diego, that all comes from our technology. That's what unblocks our chief investment officers, unblocks our growth team. So at Andy's, we're able to meet the needs of customers like Diego precisely because of our technology, and it lets us be more efficient.
Right.
Yeah. So there's a huge amount, like we spent most of our R&D actually and expense on that sourcing engine, and really making sure, right, that we can help investors select the right types of properties, but also save ourselves time. But Michal, you mentioned, right, as the guest, you appreciate having technology, like makes it seamless, makes it easy, right?
Absolutely.
Reduces friction. So we found that, telling owners, right, smart key locks at most properties is really important for folks. Having that noise monitoring for, raucous guests or parties, which helps, some municipalities require it, but we actually go and we recommend it and implement it on almost all of our properties, right? Actually, it keeps the property safe. It prevents issues and uninterrupted operations. And then, behind the scenes, right? Property management systems that we have, it connects with, a lot of our vendors, so like our cleaners or some of our maintenance providers, and so we can efficiently clean and then maximize alternative revenue opportunities, like allowing a guest to pay a little more for a late checkout or even pay a little more for an early check-in. And so having that type of solution, or just a tech-driven or a data-driven type of a company, it influences all aspects kind of our business. But Lendai, like you mentioned, right, it's a financing solution. Y'all, I'm sure, do a lot of this as well.
So absolutely, I couldn't agree more. I think we're looking into a future of utilizing technology, AI, and using it to our benefit and to our investors' benefit. So Lendai is looking forward to be the go-to lender for the foreign national, and be another piece of that puzzle. So in the short-term rental, also the long-term, but we're focusing on short-term rentals right now in this discussion, where we say we're talking a lot about property management. We're talking a lot about the real estate and the investment itself. We're talking a lot about maintaining and so on and so forth. So adding the financier or the lender piece of the puzzle to be part of your team and helps you grow is, I find, an essential piece, and maybe one of the most complicated pieces to cover. And so when we're going in and we're saying, hey, so right now, because of our technology, we are able to do it quick, right? So it's reducing the time frames. Other lenders, especially the A lenders, conventional banks, the big banks, where the time and the technology is obviously not so established, or I would say they don't want to develop it in any way. They're happy where they are, and that's being translated in time frames, we're coming in and we're saying, hey, we can cut that time frame. We can do it in a friction of that time frame because of our technology. So going in as an investor, you start the process all online, right? So we're talking about the foreign national again. So from start to finish until closing, everything is online. You don't need to be on a US soil to close a deal. And our solution for short-term rentals are coming into a place where we're taking the sub 1 DSCR to support higher value properties, right? We're going to see the slides soon, and our audience is going to get a glimpse of the properties, right? So it's a top-notch, higher value properties that looks so amazing. So taking all that, adding another lender that is also tech-oriented, can do it fast. The investor is not going to miss the deal. We're having a specific time frame where there are a lot of parties. There are the buyer, the seller, the title company. So we need to act quick, and that's what we do. So I think covering that technology part, Tammy, if you're there, let's show some of the goodness. If you guys want to add anything else, this would be the right time.
I think maybe as a closing remark, first of all, we love working with Lendai, like from the kind of the get-go. So we're excited for foreign investors to have this option, right, of really helping finance in a speedy process by people who understand, right, themselves what the pains, right, and how to go about finding financing opportunities. So it's great. We love working with someone who's like that. Add on top of that, we're both tech oriented, driven, we're a startup like, et cetera. But I think at Andes, I think what's important is to know we're an experienced management team. We're a set of hands that are trustworthy and capable, right? Given our track record, we employ next level technology really for real estate investors, and we make it super easy, right? We make it easy to invest in profitable short-term rental real estate.
Perfect. That's the goal. Ike?
Yeah, and I'll just add to sum up here. We do have a treat for audience. Anybody listening, I'm going to leave in the chat our landing page, our co-branded landing page with Lendai. If you want to connect with us one-to-one, we're happy to address some of your questions and really be a resource. We want to be a central repository of information for those thinking about short-term rentals. So I'll leave this in the chat, and with that we can cut to our media, and I'm happy to talk more about some of our flagship properties.
This is the part that we've been waiting for. So Tammy's gonna run the presentation a little bit, and we're gonna look at some, I think it's Florida mainly, right? The properties.
Yeah.
Where you guys are not only maintaining and acting as the property manager of those beautiful properties, we're also sent our representative. Tammy, that was very fast.
There may have been a lag in
yeah, we're just gonna let her run, and I'm gonna let you guys. Let's talk a little bit about the design. This crazy design and very top-notch, high-end. My son looked at that bed and he goes, "I want to go there. I want to be there." Crazy.
For sure.
Well,
yeah.
Maybe one thing, if I might, there's obviously some emotional appeal here, but by the way, at Andes, like we did not come into this market saying like we have to do this. Something that's important is we pick markets based on risk and return factors, but we go in there and we say what does a top performing property look like? So we let the data tell us, right? It's not once we're in a market, right? It's all about what is going to drive returns. And so we didn't come in thinking we'd be doing things like this, but the market rate has told us and requires something like this to obtain high returns. Ike, sorry, you're about to dive into probably something much more interesting.
That was a perfect transition. So in this market, you could probably guess this is Central Florida, very close to Universal and all the adjacent theme parks. So the tourism is such a strong factor there. It's what allows that market to be so resilient, but it also is what makes it a competitive market. And so you really want to do your homework and understand, as Cory was alluding to, what are some of these factors that create an Airbnb that's in that 1% of performance. So we work with, again, wholesale local vendors that can do these bespoke designs for us and do it at scale. And what we're finding is we're able to really compete with even the hotels in the area that are almost on site for Universal. Because when you compare the value that you get for a family, and let's say I've seen this case study many times. Myself, as I mentioned, worked with travel agencies in different countries. Even when you stay at a hotel, you're getting your continental breakfast. You're getting maybe a family suite. The Disney trips, again, it's oftentimes for the kids. So you see these kind of multi-family trips, and you could be spending thousands a night just to have access to the theme parks and be that close.
Absolutely,
easy, yeah. Whereas with a short-term rental like this, these are 6 to 8 to 10 bedroom homes, and multiple families can share them. So you can take that.
For sure.
Yep, you can cut your lodging price almost in half by staying in one of these properties. But what do you get in terms of value? The reality is most folks are not doing Disney 4 days in a row, right? You're actually spending a lot of time at home with the kids. And so in this particular market, it's incredibly important to have the theme rooms, the movie theater, the bowling, the activities that in these prime resort communities are what makes the difference of the experience. And I'll add to that by saying, this is why I love short-term rentals. As I mentioned, I do have a tourism background. It is an investment. We treat this as a business, but at the end of the day, there are real doors that you can go knock on, and you're creating real experiences for people. And I think that's also beautiful and worth noting too. It's a lifestyle as well. So I think that's partially responsible for the big growth in short-term rentals and individual investors getting interested by this as well.
Amazing design, amazing properties. I want to be there myself. And again, also effective, right? So sharing the expense, reducing my bottom line. And Cory mentioned a very good note again, saying, hey, we didn't know that this is what we're going to do. And we'll see that kind of theming when we're going into the market. We've listened or we analyzed our data. And to me, that's a key. That's like me opening a business. If I keep comparing on my personal experience, and if I open a business and it used to be more human communication that's giving me the feedback. Today it's more AI and data giving you the feedback. But as long as you're listening and adjusting accordingly, this is where you win. This is where you, if you're able to act quick and say, okay, this is what the people want, this is what's going to generate the most income for Andes, for our investors, then that's what we're going to do. And you did it in a very professional way, and you guys are experts. So I really enjoyed this session. We're reaching the end. Miles or Tammy, if you guys could help me a little bit with the Q&A. Do we have any questions from the audience? 2 questions from the audience. I'm looking to enter to short-term rental market. What is the average cost of a property? How much money do I need to bring from home? So I can, we both can answer that. You're gonna take it first, and we'll jump into the second one after.
Yeah, I can start. And Cory, if you have anything you want to add to this as well. So the answer with these types of questions, it seems like they're almost asking kind of what's their minimum ticket to get started maybe in short-term rentals. And that'll really depend on which market that they want to enter It'll depend on which product they, with Andes as well. So we have a kind of a range of products. In this market, like Central Florida, where kind of our more sophisticated investors are playing, the minimum ticket starts around 350K. We understand, and that's in cash equity, but we understand that there are really good deals to be had in and around that range. So typically what happens—
Ike, just to clarify, are you talking about a purchase price or down payment?
Down payment, the cash
down
equity.
Payment. Yes,
Yeah.
that's right. Okay.
Yeah. So, and with that, really depending on the lending side, which now I'll let you jump in, but we see home prices, like closed values, anywhere from 800 to 800K to 1.2, or so it really just depends on number of bedrooms and which neighborhood, right? So there's a lot of variables, but that's exactly why we work with investors on a one-to-one basis to understand what their particular investment criteria is, because as I was saying before, we understand that there are really, really good deals to be had in and around that range. And so we can underwrite deals for them, bespoke for their particular investment criteria.
Okay. Cory, any follow-up on that?
Yeah, I was going to say, so this is just kind of our flagship initial market. As we mentioned before, this is the least risky market, right? It's recession resilient market. It's actually a COVID kind of resilient market. There's a lot of reasons why we selected this as it's probably the least risky market, honestly, in the world for short-term rentals. And we still have pretty interesting, pretty strong returns, equity-like returns. And so we are very interested in and actively moving to grow into some other markets. So other parts of Florida right now, most of them are along the Sun Belt. Arizona is interesting. I think Ike had mentioned a little bit earlier, a number of these states. And so, right, for investors who have a buy box and a location preference, if we're not there currently, we try and advise why we're where we are and the type of returns profile that you could expect. But we're building a really quick short list of other places that we hope to enter very, very soon.
That's great. And I also want to mention that, the average cost and that kind of question obviously depend on the market. Georgia or Texas is not going to be like the greater Orlando area, or closer to Disney, can be compared to Arizona, where there's different type of gated communities. So first of all, each market is different, and also each property. So what we've shown here is a 6-7 bedrooms and bathrooms properties, gated communities, higher value, not a secret, around 700, 800, 850,000. And you will have to come with enough down payment and liquidity for Lendai in particular to secure the financing. But it's also important to mention that there are beautiful condos, that are lower in value and also generating the income of a short-term rental. So you'll have to investigate and look at the budget, look how much you can generate, and so on. The second question: how long does it take to see profit from a standard short-term rental property? We all know that based on reviews are key, and we're building the reviews. We're building the attraction and the rate. So, what is your intake on that? Whoever wants to start.
Yeah, let me make sure I understood the question quickly. What the ramp up period looks like?
Yeah, I mean, so how long does it take to see a profit? So I would say you could see the profit. I mean, you have to bring back your investment. You guys are the experts, right? So
this is a good question. Typically, the properties, it's very important to understand, right? As Ike was mentioning, there's an onboarding process, which, by the way, is pretty similar. Most real estate investments have some type of an onboarding. Usually, it's about the first 6 months or so where you build up reviews, which a lot of cases drives revenue, right? People pay more for a superhost or someone that has high ratings and 20, 30, 40 plus stays. So it takes something like 6 months to a year. During that time, the cap rates that we underwrite, it's usually cash flowing, right? It's covering interest and able to cash flow in the first year and forward. And so to see, and it grows over time, right? So like that first kind of period where, or the cap rate that we're basing something off of, it's usually between the 6 month and the 18-month mark because of that initial kind of onboarding phase. And for some of these, there's a bit of a build out, right? So you're not even renting when you have construction workers in there that are building out the Anna Castle or the whatever, the Jungle Book themed room or whatever it is.
Right.
Yeah, and so it's very quickly leading to initial just covering of costs and then moving into profitability. Year 2, by the way, you start to see repeat guests, right? They had a great time the first time around. The second time around, there's typically an increase on, the willingness to pay. Customers are actually quite sticky, right? At the end of the day, guests are sticky. And so you see that willingness to pay grow in addition to kind of the review setting grow. Booking windows get longer, which also usually means willingness to pay is high. Anyways, there's a number of reasons why there's actually a pretty quick ramp up between the cash flow from the first year and then the cash flow in year 2. And from year 2 onwards, there's kind of this steady trajectory where, right, just typical pricing increases above CPI feeds into that bottom line.
So to summarize, you're saying 6 to 8 months is around the typical time to make it more, to start seeing profit and a good flow. And then based on the year, second year, third year, fourth, and so on, you'll see a little bit of growth between each year. And
not a little bit, by the way, like
and could be and exactly.
Big, and then 2 to 3, like for those investors, right, who are more used to like the long-term rental, like maybe increases right here and there.
Yeah. So it could be a substantial jump over there, which is great. We do have more questions, but from what I'm sensing, those questions are going a little bit deeper into your fees and rates, and to keep everyone, to not keep everyone with those kind of answers. I'm gonna share again that there is a landing page, and you guys could book a consultation with Andes where they're gonna cover the fees and all the nitty-gritty of that information one-on-one. And then another question is regarding accredited investors. So I guess people already tried to go in that landing page and to book an appointment with you, which is fantastic. And thank you, everyone. That's the goal. Is it available only for accredited investors? Just so the audience will know.
Yeah, and I'll go ahead and make sure. We typically have a definition of accredited investors in the U.S. To be considered an accredited investor, it can be an individual with an average yearly income of over $200,000 per year, or you've worked in a financial industry. So it's very likely that our audience is already qualified as accredited investors, and that's because we are, at the end of the day, a U.S. company, and so. In the event that you were regulated by the SEC here, we work with investors. Our marketing materials are for those who are considered investors by that definition.
Right. And also, guys, don't forget that when we're talking about the higher value properties, in terms of financing, that's approximately that, and then some is approximately the liquidity that we want to see. Right, so we're not going to take any adventures, even as investors. We don't want to take an adventure that will put us in a spot where we're not able to come out from, or any funny situation. This is not the goal. The goal is to go in with enough liquidity, and we're going to give you the knowledge and the expertise on the other side. I think So the fifth question I see here, and that's going to be the last one. Okay, so do you have a view to best short-term rentals, ROI, cash flow plus capital security markets at this point in time?
This is a really good question. But Ike,
Yeah.
sorry, you're gonna look like you're gonna answer. Go ahead.
No, I was just going to turn it over to you. Let's say good
Okay.
market selection questions. So I'll go for it.
Yeah. So, yeah, capital markets pretty intense right now, right? Like no one knows what the Fed or other kind of governing bodies that set interest rates are going to do in the short term or the long term. What's important is being able to cash flow, right? And in year one, again, these types of assets, they take time, and it doesn't matter like where you're investing with the short-term rental, right? That onboarding and growing ramp, it's the same like everywhere. And so it's a really good question, Brad, and probably something for a longer conversation as far as the best. And so different people have different ideas of best. For example, there may be some risks that, as an institution, which we also work with, some like larger investors, risks that are important to them may not be as important to you, right, as an individual, or maybe you're willing to take more risk in certain areas, like maybe rural versus suburban is not as big a deal. Maybe a single season or a dual season market is better or is fine for you versus a multi-season type market like we're in currently. So anyways, those will have very different types of cap rates or cash flow or ROI kind of returns. But it's because, right, of that risk. And so anyways, it's a long way of saying that we have an informed opinion on a number of these. And if you tell us, which ones to flex, then we deploy our kind of machine learning models, our finance team, and we can help you find where, like, what kinds of markets have a lot of downside protection, right? Risk adjusted return, but then kind of turning the knob a little bit on what types of risk factors you care less about.
That's a great answer. I have nothing to add really than, the capital markets and securitization companies when, especially around 6 months ago when interest rates started to come up, that's where the risk also came up, right? And that's where they're saying, okay, whoa. We don't know what's going to be the value. We don't know what's going to be the interest rates tomorrow morning. And we're taking a step back. And this is where whoever, working with us, we're making sure that this is going to work. So if we took the loan, if we took the risk, if we financed your deal, that means that it's, where it's going to go to good hands eventually, and we're going to secure the financing. And we're going to wrap it up. I had such a good time. I feel like this session gave a lot of input, information, knowledge to our foreign investors, the audience that joined us. Thank you, everybody. And like my famous sentence in my webinars, thank you for another fun day at work. Great afternoon. And if you guys want to say your goodbyes.
Yeah, wonderful meeting with you all. Really appreciate this opportunity to talk about Andes with an incredible partner at Lendai.
Absolutely. It was a pleasure. Thank you guys so much for having us, and we look forward to keeping this conversation going.